Guys, it's Austin Booley, and I wanted to talk about how to trade SPY options for 1,000+% gains a day. Of course, that's not going to happen every day, but I just wanted to show you what happened today and how I traded it. So this is SPY, which is basically based on the S&P 500. You have SPY and you have QQQ. Those are your main ones for following the market measures. Obviously, our economy has been in this nice little uptrend here, but we are testing lows on both the QQQ and the SPY. And of course, all this is going to be roughly based off the futures market of the S&P 500, which is this. But since most of us don't trade future options, we're going to look at SPY for the options. So this is what happened today. So if you look at the 15-minute 30-day, we have a consistent downtrend. If you connect all these lower highs, we're going down, downtrend. We're bouncing off support levels, then breaking through support levels, testing support levels, and breaking through back again. Today, this is what happened. I'm going to show a recap here. So we're having a downtrend, lower highs that are pushing this down lower. This push down lower is before it's making this push through previous support levels. So we had a support level here, connecting the bottom here, and it pushed straight through that. And I want to show you how I approach trading the SPY today. Sadly, I am getting my account verified because I'm opening my own or a new account, and all my money is not in a current account, so I could not trade. But paper trading, this is what I did here, and this is what I saw step by step. So if I go to the 10-day to minute, this is what happened today, and this is yesterday, and just so I can show you what I was looking at. So when I opened up today of the S&P 500, I noticed that there was this high that it just didn't seem to break. Like it kept trying, the volume wasn't there, and it dissipated, it went down, it tested again, it didn't. And then when market opened, it decided to test this resistance level again. So we're having this test of resistance level here throughout the whole pre-market and then after market on Thursday. And then we're having lower lows. So we're setting up for a bearish move here. That's what I saw. So then when market opens, you can see, I'll zoom in here, we have this indecision candle. Again, I'm on the 2-minute 10-day. We have this indecision candle here forming right at the resistance level. It went down, it broke below the EMA line. I picked up some contracts here. I picked up 5 contracts. Again, it doesn't really matter because it was paper trading, so I just got some. I was more worried about seeing how much percent gain I could get. So I picked up some contracts here. We went through. We continued trending down. We broke through this little trend. I wouldn't really call it a trend line because it's not. I mean, I guess it is. Just trend lines on bottom, like connect on bottom like that. So that would be a trend line, or at least what I would call a trend line. This is more just like a guidance point. So after we broke below the EMA and the SMA line, we went down and we went down, and then we had this little, as you can see right here, we had a it's called a rectangle or just a consolidation pattern here, and I have this previous support line here. So we're having this little consolidation right near the support. So I said to myself, if it breaks above these highs here, then I'm going to get out for a profit. If it goes down, I'm going to continue to hold. So it decided to break below this consolidation, and then it went up to test it just to verify, and then it went back down. And zoom out here. Come on. Okay. All right, and then after this consolidation phase, we broke below the support level. I got this support level by connecting the previous higher lows for an uptrend, and that's where I got that line from. And obviously, it was a valid one because when we crossed it, we had some indecision here. Then we went down and formed a falling wedge pattern, and I was fine because obviously I entered here, so I was up a lot. I want to say like 300% here. So of course, like if I entered here and I'm having some indecision here, I would be very likely to get out. But since I was already up so much, I thought why not hold? And it ended up being a falling wedge pattern. Broke below this falling wedge. It went down, broke below this key level support. Let me show you where this key level support is. This key level support is right here. When it dropped down, it bounced right here. So I knew that this was going to be a key level. Okay. So I put my support line there. All my key levels are in dark red and my normals are in light red. So when I approached that line, I knew I was in key support level territory. So I knew we could either experience a huge bounce here or a break through it. So we broke straight through it. I thought we were forming another falling wedge, which we sort of did, but it continued to bounce here. I guess it was just testing this support level because old supports become a new resistance line. So this old support became a new resistance and then continued to break lower. And then that was basically the day. After that, it started forming these higher lows. And after this one, the end of the day trade would have been the bounce off this line up there. I don't know how much that would have been, but if you trade end of day, that would have been a great end of day trade. So that is what happened with the S&P 500 today and the SPY specifically. So I took a screenshot of what the options, like the percentage gain for the day that the options look like for the weekly options, and this is exactly what it looked like. I'm going to have to go in here. This is what it looked like. Let me make it a little bigger here. Okay, so this is the SPY. This is the weekly options here. It was amazing. We're looking at 1,200%, 1,385%, 1,600%. So let's just say it was 1,000%. So whatever money you put in, multiply that by 10. I put in 500, multiply that by 10. That's $5,000. I think it's quite amazing that you can day trade with a little bit amount of money and make a huge amount of money, yet still have that defined risk. So the most I could have lost would have been $500. Yet obviously I could have gained if I would have had this one and I would have held it to that period. 16 times 500 is $8,000 about. So I could have made $8,000 in a day. So basically, in order to trade anything, you need to understand, in my opinion, you want to understand support, resistance, and trend lines. Okay, so support, resistance, trend lines, and especially flag patterns. Those are the biggest things to learn how to trade. So that is how you trade the S&P 500 weeklies for huge percentage gains. Obviously, the reason why in this market we're day trading and we're not swing trading, or I'm not swing trading, is look at this market. So you can think it's red here. You go, oh, look, it broke below this support here. I'm going to buy some here, but then it shoots back up, it shoots down, it shoots back up. We're having these crazy volatility. I don't really know what the implied volatility is or what the VIX is at, but it is pretty volatile. So I'm going to stick to day trading as my primary source. But that is how you would trade the S&P 500 today. I hope that helped. If you want to join a Discord group with a bunch of options traders, that is below. Y'all have a good one. Hopefully this helped, and good luck in these markets. Bye.